traders. So I'm recording. Oh, I got it recorded, baby. All right, cool, cool, cool. I just want to make sure that I could send you guys the videos. So, after the Mastery Summit, obviously, when you're in, a summit like that or anything, it's hard to pack in everything that you need to do, So you got to think of trading as like when you come to a summit like that, you're going to get like bits and pieces of it, but it's really hard to kind of piece it all together. And even the subject that I was speaking about myself, that's a 10-hour subject. You know what I mean? And so like, how do you get everything that you need to do, right? And so for you guys in your trading careers, right? You're taking your notes and stuff, and I want you to really think of this as, right, you're building your cookbook of recipes, right? You're building your cookbook of recipes. Every part of the trading day, every trading setup, every different type of market, bear market, bull market, distribution market, accumulation market, they all require a different recipe, okay? When you use something static and you just overlay it to everything, that's when you get really, really shitty results because you're not able to pivot and adjust accordingly, okay? So, you're building your cookbook, and so every single thing you do has to have a process to it, okay? Everything has to have a process to it. So there's hundreds of trading setups, and obviously we don't want to learn 100, but we want to learn a few that can last us in any market. So every single trading setup has its own recipe, right? And so we have to learn that. Like, how do we find them? What do they look like? How do we manage the trade? How do we do anything, okay? How do we get into all of that stuff? Well, that's where it's going to be the nitty-gritty. And so what I'm going to do is I'm going to narrow down what we talked about at the summit, where I give you like kind of the 3 parts of the day. I'm going to give you how I trade the first hour, but like the whole shebang, because there's a lot that goes to it, and I use this stuff every day, okay, in multiple different setups. There's 4 or 5, predominant setups that I use in the open. We're going to go into the 2 that I use every single day, okay, and really nail it down. I will make sure at the end to do Q&A and answer every single person's question. I don't have, a timeline or a time set of 1 hour or anything like that. Frankly, I'm probably talk more than anybody else, and so I tend to go overboard anyway. So at the end, I'll make sure to get into everybody's questions, and just remember, there's always a lot of people in these things, and so when I'm going through the Q&A, if I don't get into your question right away, I did see it. It just happens to be I usually just go in order and I just knock them all out. That's more my style. So let's get into the work, okay? So who we are as day traders, okay? And so first of all, even for you guys to think about this, out of the 100 and something people in here, a handful of you guys are going to be day traders. A handful of you guys are going to be swing traders, which means multi-day holds. Some of you guys are going to even hold longer. One of the things to always remember when you're thinking about your trading career is, what style of trading do you want to do, okay? And this is a very, very important thing, okay? I've taught thousands upon thousands of students, and this is one of the most important things that you can do. When you trade a style that goes against your personality, goes against just your internal belief structure, you will have really, really bad results. Trading is supposed to be fun. If you guys ever see us like in our chat room and stuff, like, when I'm in my chat room stuff, like you see the stuff, like I'm on video. We literally, like yesterday, we had a 90s dance party, right? And while we're trading, I'm on video doing all this stuff. And it's fun. Trading should be fun, okay? And when you trade a style that you don't understand quite well, or that just makes you uncomfortable, the time frame doesn't match you, maybe it doesn't mesh with your work situation, your results will suck. I mean, they will be awful. When I first started trading, or teaching people how to trade, before we had all this webinar stuff, and you had to do everything old school. I was teaching a couple students on AOL Instant Messenger. the typing type of coaching. And I had this student of mine, Rahil Guzman, and Indian kid, short as fuck. And I think him being so short, like he was like really afraid all the time. Like his mom was always yelling at him, towering over him. So he's like really, really like kind of like a scared kid all the time. He was like, I used to say stuff to him, like we'd Skype sometimes, go like this, he'd be like, and so when I'm coaching him, I'd be like, man, okay, well, let's try to figure out what you like to do and where you want to go with this. He's like, no, I want to just trade just like you. And I'm like, well, I'm a really aggressive trader. I trade momentum stocks that are flying around. Maybe we need to find something that fits your personality a little bit better. He's like, no, no, no. I want to trade what you do. And we would be trading, together all day. And stock would go up 5 cents. And he'd be like, oh, my God, it's going up. And he would sell it. Stock goes down 5, 10 cents. He'd freeze and be like, oh, shit, it's going down. Like, he was just a hot mess. Those small little fluctuations. And when you're day trading, you're just like, all day. Totally fuck with his head, okay? Like he could not, it just did not fit him. We used to make fun of each other all the time. He says, this guy paid me money to teach him. But like, it was like, it felt like such a lost cause doing it this particular way. And we would like laugh about him like, man, you're like one of the worst traders I think I've ever seen. And we would look at his statistics. We keep track of statistics for everything. You could ask one of the, my risk managers, be like, what, on average, how long does Canal sit on the throne in the morning before he starts trading? And they're like, 12.2 minutes. Like, we have statistics for everything that I do. And so, even when I'm teaching, I'm keeping statistics of these guys. And his stats were so bad that if we just threw literally darts and just said, hey, it's 10-cent stop loss and everything, he would have made so much more money than what had happened with him actually having control over the stuff. Now, on the side of things, the kid was smart. He was analytical. Oh, he had a wonderful personality. He was nice to his parents. He was a respectful student. He had a good heart. But yeah, we were laughing. Like, why is this guy the worst trader of all time? And part of it was that, right, he was trying to trade like me. Well, that doesn't always work. And so over time, and one of the things that we noticed with him was he used to get afraid of news all the time. Like, he'd text me like 1 in the morning and be like, oh man, I think this stock's about to have news or earnings. Like, dude, what if I wake up and it's down and 5-10%? I'm going to get smoked out. Like, he could never sleep. And so, what we found out with him was, all right, well, let's not trade in the way that I'm teaching you. Rather, let's elongate the time frame. So like when I day trade, I trade 5-minute charts. Because I find that they work really, really smooth and they're really easy to see. 5-minute charts were too aggressive for him. He was getting freaked out all the time. So like he'd have, we'd be trading these wild stocks like Nugget, this is like a gold ETF, and the 5-minute charts were just too much action for him. It was too much action for him. And so what we found out was that him actually trading an hourly chart. Hourly charts. That means each candle is 1 hour. And this is not something I recommend or I'm saying, promoting or anything like that. But each chart, each candle is now 1 hour. So he's looking at a much longer time frame. And all of a sudden, when that happens, when you look at a 1 hour time frame, you will see patterns on a bigger picture and really be able to capture like much, much bigger runs, right? And so what happened was when we moved to those hourly charts, he was able to get into trades that would last like a few days, but he would get much, much bigger chunks. Like, so this is like a day trade pattern, right? A stock comes down and it bottoms out and you build a ranger and you come up. If you saw this in a day trade, you would make maybe like 20, 30 cents or something, right? But if every candle is an hour, you're looking at a much more elongated time frame, right? When the pattern works out, you're going to get $4 or $5. And so you're making less trades, but much longer hold times. And that one thing of just changing, instead of 5-minute charts, every candle 60 minutes, that changes his whole life, and like 2 years later, I mean, he raised money from friends and family, started his own hedge fund for options, and just traded ETFs. He would just trade ETFs. And, to this day, like, he's just been out killing it. And it just came from the fact, like, when we talk and we kind of have like our, bi-monthly, like, get together of, hey, what's going on? We laugh about to this day. He's just like, man, I can't believe I was so bad at day trading. I still want to get the inkling to do it, And so one of the things I always think about is just who you want to be, right? And so some of that will come from trial and error. Some of it will come from simulating, but, always be mindful of that. But if you are a day trader, now even as a day trader, there's very, very specific types of day traders, right? There are the people that only do shorts. And there are people that only do longs, and there are people that do penny stocks, and there are people that do ETFs, and so on and so forth. For me, I'm willing to trade anything, okay? I'm willing to trade anything, long or short. Long or short. I want to make money, so I have an open-minded system of trading, meaning I'm willing to trade at all walks of day in all different setups, long or short. Now, I don't care if it's $1 stock or $100 stock. If it can make me money and it's got big enough range on it so I can actually get paid, I'm willing to do it, okay? Now, even as day traders, narrowing down your focus sometimes of what kind of day trader you are, but even from there, the stages of the trading day will require totally different setups. And so how you trade at the open is very different than how you trade at the middle, which is very, very different than how you trade at the close. Okay, the setups for each of these stages are different and need to be managed differently. The open, which is what I focus on, is characterized by price discovery and price volatility, meaning, stocks pop out of the gate all the time. The first couple candles, they pop out the gate. That's what they do. That's where you're discovering where your equilibrium is, where the supply and demand are starting to meet. But you don't really know where it's going to go. So that's the phase of the day where you get that excitement level. This is the phase of the day where I notice, at least my new students, they all lose in the beginning. It's the hardest part because of the action, especially if you're not actually sticking to the techniques, okay? When you start to wing it, then it becomes just a crapshoot, okay? The reason I focus on the open is, waiting until, 30 minutes or an hour into the market passes, it gives away tremendous opportunity. I like trading at the open because, well, frankly, I'm a single man. I'm a man looking for love. I got to get out of the house and go look for my notebook type of love. I can't be sitting at the computer all day, So I like trading that open where I have the opportunity to make those quicker gains. So two of the setups that I use every single day are ORBs, which you've gone over briefly in the Mastery or the Trading Summit, and then red to green moves and green to red moves, which are not a setup in itself, but a trigger for numerous different types of setups, okay? It's a type of trigger for numerous different types of setups. So I want you to think about this. So, before we get into ORBs and red to greens and, all these type of charts, first let's talk about just ways to even set up charts, so that we're all like looking at this same thing. So this program I use is called TC2000. This is a charting program. I don't know if it's the best in the world or whatever, but I've used their products for over a decade, okay? I like the way the charts look. They're clean, they're crisp, they're easy on your eyes. And then it's just very easy. It's very module-based, and it's just easy to look at. It's easy to set up your scans, and you can have numerous layouts on TC2000. So, like, if I wanted to watch 6 stocks, I could watch 6 stocks here. And if I wanted to watch, like, have my indexes up and do this, I can do that. So I can have as many layouts as I want. For my retirement accounts, I like a layout like this where I'm staring at the bigger picture of things. So I like this TC2000 because it's adaptable to what I need. For all intents and purposes for you guys, this is like a paid product. It's like $100 or whatever. Maybe not even $100, $60, $70. It's awesome. But for some of you guys, when you're new, you got to think of trading as a business, right? So you're the CEO of your new business. You're the CEO of your startup, okay? So it's like Christina Enterprises. Well, in any new business, one of the main things always to do in the beginning is what? You got to run lean till you're profitable, right? You got to run lean. You know, you got to cut corners where you can. So when you're new, you know, always be mindful. Are there tools that I can use that are freer or cheaper? All those little things, the $10 here, $15 here, $30 here, it doesn't seem like much because I know like you guys are coming into this class thinking, man, I'm going to be a millionaire soon. Who gives a shit about the 30, 40 bucks I saved? Every penny counts because when you elongate it over the course of the year, it adds up. So this TC2000, they have a free version of it that's pretty good. It'll look just like this. You guys can all go on here. It only works with Internet Explorer and Mozilla, but if you go on freestockcharts.com, you can come on here and hit this run free version, and you can make your charts look just like mine. This is just the free version of what I'm using. It'll just be missing a couple of the bells and whistles of scans and stuff like that, but I'm going to show you how to set up my charts real quick, how to set up your charts real quick so that you're kind of able to look at some of the same stuff that I do. So if you're on here, go to freestockcharts.com, hit this create new layout, and what we're going to do is set up our charts in the same manner. Okay, so just type in NUGT, so we're all looking at the same stock. Actually, don't even do NUGT. Let's do TLWOs. This stock I trade every day. So type in TLWO, and then kind of move this down a little bit. Okay, so I'm going to show you how to set up your daily charts, and then I'll give you an idea of how to set up your intraday charts. So when you're here, where this is 10 minutes, I want you to change this to daily. Okay, so you're going to have a stock that you're going to have something that looks like this. Now, from here, I want you to add in indicators. So I want you to type in moving average 3 different times. So it's going to say add moving average to, click price history. I want you to add that 3 times. Okay, so now you got moving average, moving average, moving average, moving average. Now we want to change around these numbers. Guys, remember this will be recorded so you can refer back to it. I know technology sucks. I suck at it. I got a guy full-time on staff for my students that literally goes on people's computers and shit and fixes it and sets up their charts and stuff. All right? Like, you got to do it. Because even for me, it's just a little bit back-breaking. So now click the second one, edit it. Change now this color to something a little more sexy. Try a little pink, right? Boom. And then put this next one, edit it. Now put 200. Okay? So this is your daily charts. Okay? Daily chart. So each one of these candles is your daily chart. Now click this thing over here. And now I want you to set up your intraday charts. So move this down. I want you to add in some moving averages. Type in moving twice. Now we want to change around these numbers. So the first one, I want you to hit edit, and keep it at blue, and turn this period to 9. All right? Now turn this average type to exponential. Yeah, Jennifer, you should be able to see my charting program, this thing that I have up. Can you guys see the free stock charts? Okay, good, 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 good. Woo. I got nervous. Good, 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 good. All right. So now, this moving average 50, edit it, and turn this to 20. All right, now change the color. Maybe like orange, maybe? Yeah, change that to exponential. Cool. Now add one more. I want you to put VWAP. Add to price history. You know, Michelle, I have this program on my Mac. I think you might have to install like that Microsoft Silverlight. I know on my Mac that's how it is. Change this color of the VWAP to what color? Let's make this thing. No. Let's get a little fuchsia in. All right, cool. Now, guess what we got here? Karina, I can see everything and I feel everything in life. All right, cool. So now, when I have my intraday charts, I like to kind of go back like 2 days. I want to be able to see like 2 days worth of the action. And the reason why is that oftentimes, like if you're buying and selling something, guess what? You know, you kind of want to see the action from the previous day. So that's going to be really, really important. So now before we get into all this fun stuff, so you got your daily charts, and you got your intraday charts. Now if you wanted them to kind of, if you don't want to flip back and forth, you can do this. See that? Hey, and now guess what you got here, buddies? Boom. You've got your intraday trading, and you've got your daily chart. Now you're ready to roll. And this is really important. Why? To be able to see both. Does anybody know? So in trading, there's so many things that screw up traders beyond just knowing patterns. One of them is, of course, matching the patterns to the time of the day and also the time of the market. The patterns that we trade in bear markets are very different than bull markets. But even more important than that is that your patterns intraday, when you are day trading, they get their oomph, their juice from the bigger picture charts. Long-term trends exert the most influence on your short-term trends. And so what will happen is if on a bigger picture, you're seeing a stock that's maybe coming out of a pattern and it may be going to run for 4, 5, 6 days. Well, if that's the case, what's the stock you want to be day trading? That stock that you know could be running 4, 5, 6 days. So this is actually a stock that we have in our on the website at Bulls for a swing trade, meaning it's for a multi-day hold. So, you know, I have an entry in this thing like 57, 58 bucks, something like that, in this pattern because I figured it was going to break out. So I have that in my long-term like retirement accounts. You know, this could be a 10-day hold. But one of the things I know is if this stock is going to break out, it's probably going to run to 70, 80 bucks. Okay? And so to me, if I think a stock could run from 57 to 70, 80 bucks, what type of stock do I want to day trade? Well, if I have a bigger picture thesis that this stock could do X, Y, Z, well, now I'm day trading with the wind at my back, saying, hey, this stock could be doing this or this or this or this. And now you are starting to align on multiple time frames. The alignment on multiple time frames is the most important thing you can do for timing your trades. Aligning on multiple time frames. Because what people don't understand or forget sometimes is that if there's millions of traders out there, they're all trading on different time frames, right? 1 minute charts, 5 minute charts, 60-minute charts, daily charts, so on and so forth. Okay? And so people that are trading on those different time frames, what are they doing? They're essentially, in a way, competing against you, right? So people on one time frame, a stock could say sell, it could be a sell, and so people on those time frames are selling because that stock looks done on that time frame. And you're looking at a 5-minute time frame and saying, wow, this looks amazing. So you're buying it, thinking this thing looks amazing on your short little time frame, but guess what? On the other time frames, a bigger picture, people are selling. So guess what happens? Boom, your pattern does not work. Your pattern doesn't work. And that's so huge, okay? So huge. Your pattern won't work because on the bigger picture it's saying sell. And so that's what people are doing. And you're just here hunky-dory day trading around and it's like, boom, you get smacked out of a trade. Well, that's why. So having an idea of what's happening on your bigger picture is going to be very, very important when you're trading. So that's why I have, when I'm day trading, my daily charts and then my intraday charts always connected. Very, very important, guys. Okay, so let's talk about these ORBs, right? So an ORB is a stock that will typically gap up or down at the open, right? Then we're going to be buying on the break of a consolidation range of a minimum of 2 5-minute candles, and we can buy the third one. Sometimes the opening range might take, frankly, it could take 30 minutes. But the best ones of these will be right at the open. The short setup is the same, just in inverse. So one of the things that I do, and everybody's a little bit different, but I use like trade ideas, right? So trade ideas is like an intraday scanner that you can use and kind of program stuff. So like I have this scanner here for gappers, okay? So what you'll see here is a list of stocks that are doing what? That are gapping. So during the day, during the trading day, right at the open, so I do this around 9:15. I'll start to dig through and look at the stocks. You know, I'll start looking at each one of these and saying, what could potentially be a trade? So like this AVXL's got a history of runs. It's gapping out of some over some resistance. This could be a potential play for ORB, so I'd flag it. They'll go down the list. Galt. Galt is also a stock that looks like it's breaking out. So that could be a stock I put on my list. CNET. You know, so now what we're doing is we're putting our list together. So CNET I wouldn't put on my list. Why? Because this stock's a hot mess, right? Its daily chart is not clean. So for those of you guys that are new, okay, there are predominantly patterns that we trade on daily charts. So just like we're learning ORBs, which is an intraday chart, there are patterns that we will be using on our daily charts. So, for example, this Twilio, what is this? This is a flag pattern. That's a pattern that we use on daily charts and intraday. So that's if I saw a stock that was gapping and it was coming out of that type of pattern, then that would be something I'm interested in. This CNAT is just, right, it doesn't have anything here. So like I wouldn't trade that. Like that's, to me, a little bit of garbage, right? So I'm making my list based on what could be clean, okay? What could be clean? What could be breaking out of range? And so like certain things like this Galt, I mean, it's okay, but it's not really breaking out of any range. It's not breaking out of any highs. Like this is not probably my type of stock. Stock's been a big downtrend. You know, ideally for me, that's not something that I want to be trading. Okay. Nugget, you know, is a stock that I trade a lot. So like Nugget might be something worth actually playing. But Nugget had its big gap yesterday. Right? So like today is more of an exhaustion gap. So I wouldn't be necessarily trading that. Yesterday, because it's day one of the move, that gap, I'm a buyer of ORB. You can see this thing gapped up like 6-7%, and it's still, right? Pop up 1, 2, 3, 4, 5. That's the type of play I would like. That's day one of a move on a stock that's coming off of support. Okay, so I'm going through all of these to find the gappers. Okay, one of the ways, let me give you a little tip on how I kind of train myself to spot these. Every day I'd go through the top gainers of the day. And one of the things that I would do when I go through the top gainers of the day, I would just go to my TC2000. See, you can you can flip through charts just via spacebar. So every day I'd go through these charts, at night, and I would just do mental exercises like, could I have played any patterns on this? Okay, yes, I could have. And, I'm making mental notes. Like, okay, I could have done an ORB on this, or a quick pullback buy on this, or a day-long consolidation on this, or a VWAP on this. And I'm mentally rehearsing them in my head so that when I get ready for the trading day, guess what? I've actually practiced these things in my head, and I'm actually ready to do it. And so go through them. See what you can do. Like, what are some different patterns? So like this, is a base breakout. So this is a base breakout on your daily chart. So this is a stock that's down a lot over the years, but it's reached some level of equilibrium where the selling is stopped, and it's based out for a period of months. And so when you start to break range like this, that's a stock that's high on my watch list because, frankly, it's got a lot of room where it can run. And now there's all the sellers have left in this, right? Who's really left to sell in this stock after it's $50? The volatility, the volume, everything's died down. You've built a range. Now when you start to come out of that, that's really exciting. And so I can use our intraday patterns even on something like that because I had this awesome daily pattern. And so your daily patterns and your daily charts will give you the idea of what you want to trade, your thesis behind the trade. Your intraday charts will just help you narrow down your focus in terms of your entries, your exits, and how you manage your risk. And that's for day trading. If you are swing trading, what happens on your daily chart doesn't really matter. You are just focused on what's happening here. You're saying, wow, this pattern is a base breakout. I'm going to be buying this stock at $5.50. I'm going to put my stop at under $5. And, I'm going to be playing this breakout. You don't need to necessarily be watching your intraday charts because it'll just make you overtrade, right? When you make a swing trade, you're going in for the hope to get that bigger gain. So now, with these LRBs, if you don't have something like this trade ideas, you don't need it. A free way you can do this is go on the stockmarketwatch.com, hit this pre-market button, and what you'll see every day are stocks that are showing up that are gapping up and down. Up and down, right? Because we're going to be playing them both ways. Remember this. Don't be a one-trick pony. It's good to be a specialist in the market where you know an idea of a methodology. But if you just short all the time, that's all you can do, you're going to miss a lot of stuff. And if you just long all the time, then you're going to miss a lot of stuff when it's time to short. Having a setup or two on both sides will be really, really helpful, being able to trade both ways. There are times, like even last year, there were a couple of earnings periods where every day all the stocks that had earnings up, they all were gapping down. They all were gapping down. And so guess what happens? You want to be trading to the short side because when you see the gap down, right, we're trading with that trend. We want to be shorting that. So stock market watch, when you get these things, oh yeah, hit the pre-market tab. Right, when you get these things, go into your charting platform, right, and start typing in the tickers. Like, okay, I see CNAT, I see this, I see that, and start to study them. What are the daily charts? Does the stock have a history of making big moves? Does it have pre-market volume? Is this a stock that can give me what I need from it? Like, is the expectation for this, if I'm looking for this big type of move, can this stock give me that? Does it have the characteristics to give me that? For example, like if you saw, if I saw that type of gap or something and it was Bank of America or General Electric, like maybe not. Like this MRTX, it's got a 10 million share float. It's got a hot daily chart. I know that this thing could potentially move 15, 20%. But if you saw that type of move, a gap in GE, like today GE gap, can you really expect anything out of it? No. Why? Because every single day, this stock has a range of 20 cents. It's a grandpa stock. Not that there's anything wrong with it. 15 cents today. Day before, 20 cents. I'm just teasing a little bit, Mr. Cena. Check this out. So, like, see this? The other day, it looked like GE tanked. Look at this like crazy downturn, right? See this? It looks like the world ended on this day. 50 cents. That stock's float is 10 billion, 9.3 billion shares, meaning that's the amount of shares that are available to be traded on the open market in the stock. It's not going to move very clean. Because think about this. So the stock does 29, 30 million shares a day in volume, but the total number of shares that can be traded is 9 billion? I mean, Warren Buffett could come in and say, I'm going to buy 1 billion shares of this thing. It's still only 10% of the company is out there. It just doesn't have the possibility to move like that. Okay? Reverse a stock like TLWO. See this stock? It's got 8.6 million share float. Now, look, the volume on it today was 9 million. Yesterday it was 6 million. It's not an e-liquid stock. It's not an e-liquid stock, but it is a low float stock. See, a lot of people, they get into small caps because, right, they want stocks that have the range and do all that stuff. But what will happen oftentimes is sometimes even larger companies will behave like small caps. They'll behave like small caps just for the fact that their floats are really, really low. So regular companies, even billion-dollar companies, can have the same characteristics as a big POS turd small cap company. It can move in the same manner, those aggressive manners. You can still do it. This SRPT, we've been trading this the last couple days. Same type of deal, right? This is a $50, $60 stock. The day that, its news came out, the stock dropped down to 42. We were adding this thing in the chat room. Within, right, 1 hour, it popped $10. It trades like a small cap stock. I mean, that's 20% move right there in, a span of a quick hour. You could have those type of ranges even in regular stocks as long as they've got the characteristics that you look for. And so that's one of the things that we're always filtering through when we're looking at our gappers. Can this thing give me what I need? So now let's take a look at this bad boy. Oh. Let's get this thing. All right, check this out. It's like this GBR. Right? This is a stock that's got a low float. It can make moves. When we see something like this, This is the type of action that we want to be looking for, right? And so right off the bat, you can see the stock pushes at the open. And then see this tight range here. 1, 2, 3, 4 candles. So it's just a mini flat. It's just a mini flat. And that's what we're looking for because this is meant to be a quick trade. If you are taking a trade at the opening range, guess what happens? It's meant to be held for the open. The open is where you get the price volatility. Middle of the day is where you get retracements back down to deeper levels. And then end of the day, you tend to make a decision. Does it fly or does it tank? Right? That's always 95% of the time, that's your pattern, right? Thrust, retracement or consolidation, and then go or fade. Always be mindful of that. GoPro, same type of deal, right? So GoPro is a stock that's got a history of making big moves. It's got a nice range on it. The float's under 100 million, so that's a low float stock to me. Anything under 100 million is a low float stock, right? And I know that this stock, you know, when it opened up, it used to have these $5, $10 days. It's got the history of having these bigger days. Perfect. Stock gaps up at the open. Stock gaps up at the open. And you make this nice range right here, right off the bat at the open in that first 45 minutes. And ideally, this is one of the things I always remember is, you know, ideally, you've got your moving averages starting to kind of ride up under a stock. The further you are away from where you buy and where your moving averages are, the choppier a stock will act. So if you ever got it like in a stock that looked like a hot breakout and just died out of nowhere, most likely it did not have your moving averages converging under it, offering that support where the pattern actually filled out. And so always kind of keep that in your back of your head is like, if I'm going to buy here but the 9 EMA is down here, then I have a lot of room. Because one of the things to always be mindful of when you're looking at trades is this. You know, if you have, you know, a stock that's, you know, coiling up in a pattern like this, and you're thinking the breakout's here, but its support is down here, right? And you're buying here. Well, you're far from support, you're far from the breakout, and so guess what you have? You have all this room to move back and forth, this choppy action. The best trades are going to be when you have a stock pop up and then it coils up in a nice tight range. And then your moving averages are riding up right under it into the breakout. And then you break out and you're buying it here, but your moving averages are here. And the breakout's here, so you have no room to go. And when you have no room to go, now your trades are going to act a lot more. What are they going to act like? They're going to act a lot more clean. They're going to act a lot more crisp. And that's where we've got to be with this stuff is, hey, if I buy here and my stop loss is here and breakout is here, I only got this much room. It's a sandwich. But the worst thing you can do is see the breakout here, and then the support is down here, and you're trying to buy. You've got all this room to go back and forth. What will happen is your stock will ping pong around before it breaks out, and it'll freak you out of the trade. You ever buy a trade, and you get into it, and then it doesn't go, and you sell it, then it goes? Your pattern didn't coil up enough. Your pattern didn't get coiled up enough. Stocks get their power from consolidations. They get their power from consolidations. They get their power from bases. The tighter the coil, the more explosive it can be, but the less risk you have. Loosey-goosey patterns create losses, okay? They create losses and they help you mistime your entries. But if it's tight, then it's right. So this is SRPT the other day. This was a trade that this thing was sweet. So stock gapped up out of resistance. It's breaking out the highs over here. Stock float is at 42 million. This stock has a history of going on runs. It's got a history of going on runs. Like one of the things, I know about SRPT was, like a couple years ago. A couple years ago when this thing really started to run in 2012, it was at $3. And it got all the way up to $45 in 3-4 weeks. If it can go from $3 to $45 in 3 weeks, that's a stock that's got a history of making moves. I want to be in the SRPT party. We want to be in that party because this stock has all the characteristics of a momentum stock. Remember this, guys. You are only as good as the stocks you trade. You are only as good as the stocks you trade. If you apply momentum techniques to non-momentum stocks, your results will be haphazard. They will be without rhyme or reason. They won't make sense because now you have a differing of styles, right? If you are trying to short penny stocks or your supernovas or something, right? Well, if you're using that technique on things that are not supernova, are they going to work out? No, right? Everything you do has to match up. You are only as good as the stocks you trade. You got to be in the right ones. And that's all about remembering what causes momentum. Float, breakout, daily chart, expanding volume, history of making big moves. So SRPT, you get this gap out of range, right? $26, gaps up to $30. I mean, it's the easiest pot. 1, 2, 3. I got this thing at $30.60. 1,500 shares. Stop goes right under this last candle, right under $30. We're at 60 cents. And then it's just a matter of riding this thing. Now, this is the thing to remember is, once it starts to dip down, we get out of it because I know what? An opening range breakout is meant to be a trade for the open. New get, right? This is a very, very simple setup I used yesterday. So Nugget was a huge trending stock. It's pulled all the way back to its 200 SMA, and it's been just basing out for about the last 3 weeks, building out its support. Okay, so I've been eyeballing this one for a while because it's been holding this 18 support. Finally, it gaps out, and so this 18 support, like a lot of times people want to buy right at the support, but it doesn't really matter. When it gapped out of its 18 support, I got excited because gap means power. Gap means there's an interest in it. Hold on one second. Why are you not in class? You are not worthy of sending me your watch list. I got this kid. I think he's going to be a superstar. He's 19 years old. I got to kick the crap out of him all the time. He's always like, can I send you my watch list? I'm, where are you in class today? Now, you got to do that with the youngsters too because they don't really know anything yet. This kid will make like $1,000, $1,500, and he'll be like depressed because he's never really had a job before, right? I think he's got probably some rich parents and he's got a trading account, and so he's just wheeling and dealing. So he's like depressed, like I only made $1,000. So you got to kick the crap out of him a little bit and understand. $18.50 gaps up to 19. Check this out. Very, very tight range. Okay, Very, very tight range. So one of the things to be mindful of when you're looking at these opening range breakouts and stuff like that is it clean? Is it clean? Right? Is it clean? Is it crisp? When we see them, we want them to look tight. So like, see this? Like I saw somebody in my chat room trading this today. It gapped up and then it kind of went sideways for a sec, and then this candle like kind of hung out there, and people were like looking for the opening range. That's not clean enough, right? If your pattern is messy, it will treat you messy when you are in it. We want to be in the best patterns, like the ones like, if you can't see it in 1 second, it's not worth your time. If you got to one eye it and be like, I think it's there, that's not the pattern that's going to work for you. That's not the pattern that's going to work for you. Okay? We want to be able to look at it and be like, boom, this is the pattern. If you've ever got to guess, it doesn't work. I do all the time when my students say, this stock looks hot, what do you think? I want to get it. I say, well, what's the pattern? Like, why is it hot? Well, I don't know. It's been going up a lot. Well, what does that mean? Right? If you can't tell me the name of the pattern, how do you quantify what you will do with it next? Okay? Think about that. If you have a cookbook of recipes and you can't tell me what you're trying to bake, then how do you know what recipe to use? You don't. So when you sit there and go, man, that looks hot, but you can't say this is the pattern on the daily chart, this is the pattern on the intraday chart, right? You might be trying to bake a cake and you end up with roast beef, which either way is a nice gift, but right, that's not what you're trying to get. So always remember, ask yourself, what is my pattern? What is my pattern? VBLT. Stock gaps up. This stock is a biotech stock. Biotechs are the best too. Write this down. Biotechs are really the only ones that can run up like 50%, 100%, 200% in a day. Like you're not going to get like a semiconductor stock or something, right, run up 100%. Biotechs, because they're smaller, they're usually like, you know, smaller companies. They're one-trick ponies. They have one or two products. Really only day traders trade it. You know, you just have the recipe for stocks and the floats are always low and none make any money. So you have the recipe for huge runs. So basically, stocks that have the shittiest characteristics, fundamentally, are the ones that have the ability to run the best. Now, gap up, sideways. 1, 2, 3. Fourth one, it finally starts to go. Fourth one, it finally starts to go. Manage your risk down to here. Now, boys and girls, guess what? You can do these with regular stocks too. Doesn't have to be $5 candles. Sean, yeah, you're not going to have on a chart like a bunch of 1-minute candles and a 5-minute candle. I don't even. They'll be uniform, always uniform for sure. So you can do this with regular stocks too. Tesla. Tesla is a good stock. When it's tanking, it's a good stock to trade because, you know, even if you're winging around like 50 shares, 100 shares, if you got a smaller account, I wouldn't worry about it because when it's tanking, when the market's nasty, it'll move $15, $20 in a day, even in the moment. And so you don't have to be like, wow, it's too expensive. Just know you might only be trading 50 shares of it or 100 shares. You know, that's what I do. When I trade Tesla, I trade like 300 shares, maybe, you know, I might start with 200 and get up to 400 max. You know, I don't go 1,000 shares or anything like that, but same type of deal. Gap down, 1, 2, Third one you break down. So right around about 250. And then it's just a matter of flush. Now, this is a multi-hour subject in itself, but right, how do you know where to cover, right? How do you get out of this thing? The easiest thing for now, if you don't know what to do, is just to scale out, okay? But on a longer picture of just, for your careers, the thing that you have to think about is making a reasons to sell list. So when you're day trading in particular, nothing is static. There's no such thing as green light buy, red light sell. That kind of signals. Okay? That doesn't exist. Everything is dynamic and it's in real time. And so there are a multitude of different reasons I may sell or cover a stock. It could be that it's getting too extended. It could be that maybe I covered my risk in an exponential way, 5-6 times my risk. I may take some off the table. Maybe the market starts to rebound. Maybe the stock starts to make higher highs and higher lows, which signals a reversal. Maybe a stock starts to break above or below its moving averages. So these are all different ways that you would be getting into the stock, okay, or getting out of the stock. Now that becomes a huge, huge thing. A huge, huge thing. Matt, it's not really timing the entry. I'm just using charts to time entries, right? You're looking at the quotes, you're looking at the charts, you've got your levels. I tend to anticipate it a little bit if my risk is low, but when these things move fast, and so you always got to be in. The one thing you don't want to do is be late to the party. I'm always a little bit above. That way I can manage my risk a little bit better. But I'm an anticipator. That's just how I've always been. I'm not a big person of trading on the confirmation, and the reason is, confirmation's for suckers. If you have an awesome pattern, you don't want to always be waiting till the last moment because then you're late. Just like when people, they wait for volume on a trade. You ever see a trader says, well, only buy the breakout on volume? Well, that's the stupidest thing I ever heard. Think about this. If you saw volume, that means that there was a million other traders that are already in it. So there's a good shot the breakout was before that. See what I mean? If the volume was there, then the breakout already happened because everybody already got into it. And you got to think about that in trading too, right? You don't want to be the last man to the gangbang. Could be fun, but it's also very dangerous, right? You never want to be the last one in. Always go number 1 or 2. It's probably the worst analogy ever, but it's the only thing I can think of at the moment. Now, I use this, by the way, we'll have a lot of examples of nuggets just because I trade this thing every day. I literally trade it every day. So nugget, see this big gap down. Boom, 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 boom. Now, this is the thing that you want to trade, right? When you see a big move already, your natural inclination is to what? I got to get in this. I got to get in this. But don't do it. Don't chase it, right? You never have to just get something right off at the bat. Remember that we have patterns where we just need a little bit of time and we'll be able to get in and manage our risk, right? So you got flush down and dun, 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 dun. 1, 2, 3, 4. You got your VWAP right above it too to help you kind of manage that risk. Now you're good to go to float. I love doing these, by the way. Doing ORBs to the downside, way more fun than the upside. And the reason is the stocks just when they're moving, when they're tanking or the market stinks, they just flush so fast. I mean, there's like no getting around it. They just tank, and you'll be able to take really, really quick gains in a short period of time. And that's what it's really all about, right? Let's get out of here and enjoy our lives. Gap down. Sideways movement. O to the RB. ENDP. So what do you notice about this daily chart? See the daily chart here? It's breaking down. You're at levels that you haven't been to. It's clean. See how you're breaking down? Clean. So now it's just a matter of timing your entry to get into this bad boy. So you get the gap down, sideways movement. You want the range to be really, really tight, guys. The one thing to always remember when you're looking at these patterns is if the range is loosey-goosey, your risk is going to be monstrous on it. But you also won't have the coil to push, okay? And that's where you've got to think about this stuff. So now, let's talk about another setup. I really like this type of setup. This is a setup that you're usually going to take right at the open, only if you see this very, very specific instance. Now, red to green moves is not a setup in itself. It's a trigger for 5 or 6 different types of setups. I'm going to show you one of them, but I use them for all different types of setups, including rubber band setups, opening moves. There'll be a whole host of things that you can do with them, but it's a trigger for specific setups. And so one of the things I use a red to green trigger on is when you have a momentum stock that's up a lot the previous day, 10% or more, ideally at heavy volume. Oftentimes these stocks will have a PR, earnings, or a sector-related theme that put this stock in play. Look for early morning washout, so like a light dip. Okay, usually it's going to happen in the first candle, just a quick dip. The trigger happens on a stock is when the stock actually dips down, and so it's down for the day, and then it goes green. And the reason why is that oftentimes these stocks will be up 20, 30, 40%, okay? And the next day when they open weak, and they're down a couple percent. And so what happens is people get freaked out, and they say, wow, this stock's going to tank. It was up so much the day before. And so the stock will dip down a little bit, and then that dip gets bought up and it goes green, meaning it's up for the day. So it might be down 10, 20 cents. As soon as it hits plus 0.1, which means it's up 1 penny, I'm a buyer on it. As with any chart pattern, if a stock is too extended running into its trigger, the setup is invalidated. Never buy extended stocks. Never get something too far off its support. I always think about when I trade a stock, is not where the breakout is, but where am I buying and where was the stock? Where did it just start? And if that's too big of a move, I'm not getting in that because it's going to be too extended. It's going to run out of gas. I also tend not to buy, like if a stock has 3 or 4 green candles in a row, I'm not going to be the guy that buys the 5th, right? Once again, if you buy number 5, who are you? The last man to the party, right? You don't. Armando, I don't buy anything pre-market. I'm not even I'm not even thinking about stocks pre-market. And the reason is, trading is a performance-related thing, right? So it's no different than, playing a sport or going to your job, or, right? You got to get your head right. And so the worst thing you can do, I think, is sit there at the damn computer at 7:30 in the morning, 8 in the morning, and start. I see people doing their trading pre-market and they're tweeting, and it's like, life's too short, right? Life's too short. Like you don't want to be doing that, because I think I trade better when I've got my mind right, right? And that means you wake up and you have a really good morning routine. It may involve some exercise, it may involve a walk or some sunlight, some coffee. I like to do things that have nothing to do with stocks to get my brain, my mind ready. Think about some things. I FaceTime my mom in the morning usually. Having some type of gratitude or gratefulness and being around your family. These are things that will put you in the right spot to make good decisions. Like for me, I have a gambler mentality. I give back profits a lot. Having some conversations with, my parents and stuff like that in the morning that reminds me not to gamble, right? Because it's like, you got to remember why you're doing this, right? Why are you working so hard, And so having a really, really good morning routine that's focused on yourself, I think that's huge, but it doesn't necessarily mean you got to be sitting at the computer extended hours, pre-market hours. No, I don't want to be. I don't want to be at the computer in extended hours. You know where I want to be? Happy hour. I live next to a beach bar. People play volleyball. There'll be a guy out there strumming Jimmy Buffett songs all day. Or want to be on my boat. I don't want to be at the computer in extended hours. Life's too short, guys. It really is. If you can't figure out how to make money in a short period of time, being at the computer all day and all night, it's not going to do it for you. It's not going to do it for you. I personally don't think, I just don't think it's necessary, but that's a personal preference once again, because, my whole belief is just getting myself ready for those handful of hours where the market's really moving. I want to just be tuned up. I want to be geared up rather than drawing out my day into like this 12, 13-hour block of being at the computer and just waiting and waiting and waiting. I make shit happen, right? I'm not waiting all day, sitting at the computer all day. I have a special time I like to do things. I make it happen, And to make it happen means you got to be at the right mind, the right mentality. That requires a little bit of work in the morning. You got to put your face on, right? You got to do what you got to do. I used to not shower and stuff before my first 6 months when I quit my job. I was making good money trading when I had a job. I quit my job, and I'm like, fuck, I'm going to be like a millionaire. Like, if I can make money while I'm working and my boss is hovering over me, when I can just trade all day, I'm going to make so much money. Because, when I had a job, I could only really trade. I was swing trading, meaning I was holding stocks for 3 or 4 or 5 days, and then I was day trading maybe a half hour. And so I had a very focused routine, for how to get my work done without getting fired, and also being good, and then being able to trade in spurts. But everything I did was a very rock-solid schedule. And then what happened was, when I quit my job and I got home, I treated me quitting my job as retirement. I literally threw a party. I celebrated. Like I'd won the lotto. Like, no longer am I working. I won the lotto. I'm not working anymore. And so I treated it like I retired. Like I had already won. But that's not the case, right? When you quit your job and start trading, you're in the first inning of a very long game. You're in the beginning, not the end. And that's where my mentality was wrong. And so, you see it even now, like I'm working in my living room, and all day I got desks here and TVs, but it's all in my living room. So I've always worked in my bedroom or worked in my living room, and guess what happens when you do that? When you're in Michigan, my desk, I always had to stand at this. My bed was right next to it. So I would get up. It'd be like 9:15 in the morning. I'd get up, and I'd dust off the Doritos out of my chest hair, put my gold chain on. I'd wake up, and I'd go to work. And guess what happened? That wasn't a very successful strategy. Because when I had a job, I was getting to the office at 7 o'clock to do my work before the trading day started, so that I could get my work done, so I could have that first half hour to trade. Everything was planned out. I was shaved up, mustached up. I was tight and right, all that stuff. At that time, I had hair, so I was, doing the mousse. Do people still use mousse? I haven't had hair in so long. But when I had hair, people put Vidal Sassoon mousse. That was like the hot thing to do, mousse. And so I'd mousse my hair up and do all of that. And then guess what? I would work. And when I stopped that routine, first few months, my trading was awful. And then you know what happened was bad begets more bad. Your trading is awful, so you start getting stressed. Then you start getting stressed about money because you don't have your job, and that causes you to press and force trades because now you got bills to pay, and you're thinking, oh my God, I had this awesome job. I was really doing well. I can't believe I gave it up. I can't even make $1 right now. And so now all of a sudden you're pressing and you're gambling a little bit more and things spiral out of control. And it was only when I said, wow, what's changed? And that was the thing that changed, right? That morning routine of getting up and getting ready and doing all that. I know I totally went off on a tangent, but I think it's going to be important because probably out of, giving you there's 120 people in this thing or 130 people up. 10 or 15 of you guys in the next year will probably be pretty good day traders that do this for a living. 10 or maybe 15 to 20. 15 to 20 of you guys are going to be doing this for a living, so it's something to be mindful of. Now, for some of you guys, 15 to 20 will be good day traders, but there'll be a whole bunch of you guys that are good swing traders. Day trading is just infinitely harder than swing trading, I find, with my students too. Some of the worst day traders I've ever seen become good swing traders and vice versa. So remember that too. It's like, if you stink at one of these things, switch it around. Don't be afraid to try new stuff. Do not force yourself on something. Find out what works for you. Mr. Cena, I look forward to it. So let's think about this. So you buy when the price goes green. You sell 1/3 or 1/2 position into the first spike, with a stop at the breakout price for the remainder. Red to green is meant to be a scalp type trade. They go quickly. 1 out of 5 times you will catch a big home run. But that's not the expectation. It's meant to be a scalp trade, which means a scalp is essentially, right, a trade you might hold for a few minutes, where you get those quick spikes, 5, 10 minutes. All right, let's get into this. All right, so this is OPTT. So this stock was in a big, big consolidation. I'll go back to those slides. Don't worry, I'm not skipping over them. I like to do different order. So this big, big breakout here over $3. So OPTT has what? It's got a history of making big moves, right? So when you're doing this, think about, how you're building your case. You guys know what I mean by building your case? So when you're analyzing a stock, okay, when you're analyzing a stock, you have to think of yourself as a lawyer. You are building a case of why you should be, okay? And a stock, beyond a reasonable doubt, should give you enough pieces of evidence that says it deserves your hard-earned capital financially, but also your emotional capital, which is frankly a lot more important. Anybody ever get spent from trading because they're like just in the wrong stuff and all of a sudden they're just burnt out and then everything goes the way they thought it was? That's your mental capital. You don't want to blow that. So what makes this stock worth my capital and then mental capital? So we're lawyers. We're building a case. Every trade is a 50-50 shot. Every trade is a 50-50 shot. It's a coin flip. You win, you lose. You buy, you sell. Stocks go up, they go down. It's a binary game, okay? Everything's a 50-50 shot. So as a lawyer, how do you turn things into your favor? You are looking for pieces of evidence that say, I want to be in this thing. So the first thing that we always do as a lawyer is, do we have a price pattern? Yes, we do, right? We're coming out of this flag. Good, I've got a price pattern. Good, check. Does this stock have a history of making moves? Sure, check. Does this stock have expanding volume? Check. Does this stock have a low float? Check. 3 million float, right? Does this stock have a PR out? Is it making a gap? Check. Am I aligning it on multiple time frames? Check. Okay. Now, what am I doing? I built a case that says I've got to be in this trade. I have everything lined up in my favor. Where people screw up is they just jump the gun. They haven't built their case yet. And if you can't build your case and tell somebody like a lawyer what your case is, your trade is most likely garbage. It has no meaning, no structure, no methodology to it. Okay? When you're making these trades, you got to always sit there and think, can I build my case to somebody else? If you can't, don't do it. Like if you're my student, that's the first thing I'm going to ask. Somebody says, I screwed up on this trade. I said, what was your case? I don't know, man. It looked good. Yes, you try fighting a murder trial with it looked good. Right? That's how you got to look at it. What was your case? And so OPTT, float, charts, it's got everything that I would want. Okay? Now it's just about finding entries. Now it's just about finding entries. Big picture gives us the thesis. Smaller term picture helps us find the entry. So OPTT. It goes on this big run this previous day. See this thing from 560 to 980. It's a pretty big run. So when you have a big run like this, right? So it's up 10% or more on big volume. What are we looking for? Well, the next day, I'm looking for any weakness at the open where it'll happen the first candle. It'll just dip down real quick and be red on the day. And then boom, it'll go green and you buy, stop right under. I'll use usually just 10, 15 cent stop. Once it goes green, it's got to go. They should happen right away. So look, within the first candle, it's popped $1. Within the second candle, it's popped $2. Right? Within the third, it's popped $3. That's essentially the type of red to green we're looking for. These things happen really, really fast. And the dip at the open will be instant. I mean, it's usually the first candle, and it's going to be very, very quick. Okay? Very, very quick. Now, the key to this is what? It's meant to be a scalp trade. Okay? Your red to green's meant to be a scalp trade. Later on, you may get an ORB or a flag or other types of setups. But remember, your initial red to green is good to go. Hey, Ryan, I'm not looking for a failed chart because the dip, I'm only buying it when it goes green. I'm not buying the dip. So, like, if it's red, I'm not buying it. I'm only buying once it goes green. So it's telling me that the dip, it wasn't a dip anymore, right? Because once it goes green, the dip is not there. It's gone. Like if the dip stayed and it kept going down, then you would say, you would have a failed chart. It's just small variances in these things. Once again, guys, nobody uses 1 minute charts. 1 minute charts are for wieners. I'm just kidding. 1 minute charts make you overtrade. 1 minute charts will show you sloppy patterns. 1 minute charts will make you into a overtrader. Okay? I use 5 minute charts, but once again, red to greens have nothing to do with candles because we're literally looking at the price. Right? Is it green or not? So if you think about it just in layman's terms, whether you're at a 100-minute candle or a 30-minute candle, doesn't matter. If it stock's down 10 cents and then it's up 1 cent, doesn't really matter what candle it's on, right? It's a function of price. This was the first day of OPTT's run. I did red to greens on this bad boy a few different days. So the first day, you got that nice breakout at the open, and you had that huge run. See this? Next day, quick dip at the open. See this? Like first couple candles, and then boom, gone green, and then you're off to the races. It's a very, very quick trade. Sometimes you don't even have time to think about it because it just drops down for a candle, and then you're off to the rebound. And this works on regular stocks too. Okay, it works on regular stocks too. So you don't have to just be thinking like, oh my gosh, I can only do this on, turds like OPTT. Not a chance. So this is the other part. This is what I love. So we can do the setup in reverse. Not just red to green, but green to reds. So when you're looking for a reversal on a stock, okay? When you're looking for a reverse on a stock, oftentimes a green to red can be a very, very powerful setup. So see this like nugget. This thing's about 50, 60 bucks. In 5 days, it gets up to $86. So it's up, I don't even know, what's that, 30%, 40%, something like that. Okay? 30, 40%. Pretty cool, huh? So what does that tell you when a stock's up this much? Look at stochastics. I use 513 stochastics on my daily chart. Anything above 80 is considered overbought, really extended, like an extreme manner. And so that tells you that there's a high probability of a snapback, okay? And so when you get this big run, and common sense tells you something too, right? Something goes from 50 to 80 without a rest, common sense tells you what? That this thing is very, very extended. Now, so what happens is, right off at that opening thrust, see how it pops up green? It's like your last gasp, right? It pops up green and everybody thinks it's going to continue on from the previous day because it pops up green. It gets to 86. And then look, first candle, it goes and starts to reverse and it goes red, meaning it's down on the day. As soon as it goes red, you can short it, and now you can catch the reversal all the way back down. We use this type of setup all the time. I just did this thing on this CLVS. I made 2 G's on this thing yesterday. Same type of deal. So yesterday, the stock gapped up. So this thing had been up like 5, 6, 7 days in a row. All right? And it gapped up. So it's like an exhaustion gap almost. Okay? That's that last gasp up. And so when it gapped up and it popped up, as soon as that gap doesn't hold and this stock starts to reverse down, guess what happens? We can get our short back the other way. And Nicholas, your moving average is VWAP. VWAP has nothing to do with the color, if the stock is red or green, right? So you're talking about just different things there. VWAP is for very, very specific instances, but you won't really use VWAP at the open. Green to red. Pretty cool, huh? Dun, 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 dun. Hold on. So now, this is CMCM. So this thing was at 19 bucks. And it trended up all day to 21.50. See that? It closed right around 21.50. Look what happens right at the open. See this first tick? So it closed over here. It drops down about 25 cents in a hot second, that first candle. And then boom, goes green. And you're off to the races. See, when it goes red, people are like, oh my gosh, this stock's going to come right back down. And then it goes green, and everybody's caught leaning one way, and you're off to the races. Like when I'm doing this type of trade, I'm like, literally, like I'll have like my charts up here. So I'll be watching these things. And I'm literally watching the ticker. Like, I can sit here and like the stock, if I have it on watch for a red to green, right? If that's what I'm watching for, I'll rank my stocks. And so I'll be like, okay, these 3 stocks are going to be red to greens. These 3 I'm looking for flags, so on and so forth. So I'm ranking my stocks in terms of what I want to do with them. And then it's just a simple matter of making sure that I can hit them when I see the setup. And so I'll literally be watching, the ticker, and then, I can have the corresponding chart over here. You can just link them. For you guys that have Ameritrade accounts, this thing, MedVed Trader, I think it's free for people that use Ameritrade. It's pretty cool. I mean, there's a lot of stuff you can do with it. I mean, even if you don't have Ameritrade, it's only like $20 a month, but it's cool thing to, yeah, it's about $20. But it's a cool thing to make watch lists, and like you can have as many charts as you want and drag them to your other monitors. I've used like a program similar to this. The previous version of this was called Quote Tracker, which is also a free program. I use this thing for years, almost a decade. Simon, what's up, baby? It's called MedVed Trader. So quick dip, green. Now you let it rip. Hey, Simon, you can take the trade if it takes more than a couple candles. It's never always as linear as you'd like it. Sometimes it may take a few extra minutes. Dun, 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 dun. And for those of you guys, some of you guys are already in it. We're starting our boot camp class, which is a 60-day boot camp. For those of you guys that are actually interested in learning how to trade, this is probably as much time as I spent on actually learning how to trade stocks. I've spent just as much time on figuring out how to educate people, how to motivate people, how to make sure that they actually retain information. Our bootcamp class is awesome. It really is, and it's live. And so I go on webinar like this 4 times a week, 8 o'clock at night, Sundays, Tuesdays, Wednesdays, Thursdays. For this group, I would start you guys off on Sunday and get you all caught up and ready to go. We do 1 month of live classes, and then 1 month of trade recaps where we go and we review the trades that I took during boot camp class. People will get access to a screen sharing where you can watch me trade. So I trade in front of my students every day. I'm in the chat room, so the students will get access to the chat room. Okay? It doesn't cost extra or anything like that. It's part of the boot camp package. I combine everything into one. It's a lot simpler than selling you 10 things. I combine everything into one. So I'll be in the chat room. I'll be on video, so you can literally watch me do what I do. I'm walking and talking and doing my thing. At night, we have class. We have course book, 140-page course book with everything that I have that I know about brain. We have a private community where people will be chatting with each other. I pair people up. You can almost give me any town in this country, and I can name you off the top of my head, students that are in there, whether you're in Tampa or Charleston or Wilmington, North Carolina, or Norfolk, Virginia. Doesn't matter. I know people everywhere. And if you have preferences like, hey, I don't like dealing with Indian people, I know being an Indian person, I hate dealing with Indians, I can even narrow it down to that. Question and answer for every class. Market recap sessions. We put our students on simulators. This is the biggest part. Okay, this is the most important. For those of you guys that want to really learn, after class, you got to go on a simulator. Now, practicing to trade doesn't mean anything. A lot of you guys are going to work really, really hard. Working hard doesn't do anything. Your practice has to be focused. It has to be deliberate. Okay? For every 1 hour that you are reading or watching videos, you should be correspondingly spending 3 hours actually practicing your craft. Meaning, practicing your craft could involve simulating a trade, journaling it, grading other students' trades, talking about the trades in an open forum, logging everything that you do, and starting to dissect your different statistics. These are all different areas of practice that are more deliberate. Going on market replay functions. There's market replay simulators where you say, I want to practice ORBs. And you can deliberately focus your practice just down to that one setup. There's market replay. One of our students made this market replay simulator. You can go back any day in the market this year. You can go back any day in the market this year, and guess what? You can rewind that day, and you can even speed it up. So it's like you could do it like like you're trading the actual day, but you could make it like 2x or 3x. So it's like kind of moving a little bit faster, and you can sit there and practice those damn setups over and over and over and over. That's deliberate practice. Okay. I want you to really think about that when you guys are learning, because I hear it all the time. Man, I work so hard. I read all the time. And I always say, who gives a shit? Right? Working hard gets you in the door, puts your foot in the door. That's like, that's your ticket to the game. But that doesn't really give you anything, right? Just because you're in the game doesn't mean anything. Deliberate practice. Always be mindful of that. For every 1 hour you watch videos or read, there should be 3 corresponding hours where you are deliberate practice. Meaning you're putting pen to paper. Okay? So on our simulators, we connect them to the journals and start logging the trades. Now, for some of you guys that are rich, you won't have to simulate. Like, I'm not a good simulator. I just don't. For me, I like to put my nuts on the table while I'm speed chopping carrots. Right? That's just my type of thing. Everybody's a little bit different. If you have a lot of money, obviously you're not going to take paper trading very seriously. If you have $100,000, $200,000, $300,000 account, you're not going to take paper trading seriously at all. But guess what? If you have $5,000 or $10,000, you better get your ass simulating. Okay? That's a huge thing. If you got tons of money, don't worry about it. You may need to learn some lessons. No big deal. But otherwise, smaller capital, simulate, simulate, simulate. And then I have statistics up the wazoo on how I'll know if your simulator success could lead to positive results. You should have some statistics that you need to see. I'm positive 4 out of 5 days a week. My average gain is 2x versus my average loss. And there's a whole host of different statistics and analytics we can look at to figure out, okay, is this person ready for the game? Quizzes, homework, access to the Bulls on Wall Street chat room. Besides me, there's a couple other traders in there to help moderate. I'm the one on video because I'm the face guy. But we have a couple other people in there, Mary Beth and my business partner Saeed. Awesome traders. So we're all in there, kicking and weaving. It's $2,500 if you pay in full. We have payment plans. If you need to go and spread this thing around, I can totally do that. No big deal. To get your spot in class, I'm going to start this up for you guys on Sunday. Sunday, 8 p.m., just like this. Dun, 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 dun. Email Mary Beth or give her a call. Guys, and by the way, just if you ever want to just chat with me or anything like that, you can email me anytime. This is my cell number. If you want to text me or whatever. I'm pretty good at getting back with the people. I will say, a lot of people get a little freaked out about it, but I'm awful at phone calls, so I almost always FaceTime people. So, like, if you text me, I'm, like, really bad at texting. I just don't have the patience to text. My fingers are too big or whatever. Somebody texts me, I FaceTime them, because then I can, like, do my thing. So, if you're trying to get a hold of me, I FaceTime you. Don't be all freaked out. I know I know a lot of people really like their privacy, but this is a family business, baby. We're FaceTiming all the time. So, guys, let me know, and I'll make sure to answer everybody's questions too. We've got an awesome company besides me. I work with these knuckleheads that I grew up with, my business partners. Are all my childhood best friends from grade, I don't even know, 10. I mean, some of them were held back. They're really stupid. I'm just kidding. So these are all my best friends. These are the people that work at our company. If they're not my friends, everybody else that works for us is a student of mine at some manner. I'm always spotting people for talent. I am. I literally right now in boot camp, I'll always have notes this person asks good questions. He seems sharp. He does this. Oh, homeboy has, a knack for computers. You never know, right? Because at some point, I may have some monster operation. I got to hire somebody, and then I'll have this notebook of really smart people. Jennifer, I think your computer must be all goofed up. I'm right here, baby. I'm just teasing you, too. Maybe you're just running a little bit slow. So yeah, we have a huge team of people. Besides me, I have 4 staff that are full-time traders that help with the instructions. I got a tech guy to come in and he'll fix up your computers. If you have trouble setting up your charts or software, I got this kid. He's one of my students, Dennis the Menace. He's like my intern, and he's the only in-person I've ever had be a good intern. And I literally have him go on Skype and fix up people's computers. Hey, I can't figure out how to download this software. I can't figure out how to do this. Dennis the Menace can. So that's kind of cool. Karina, I don't know how I'm going to get you the recording, but I did record it. I haven't thought about it that far in terms of how to get it. I didn't figure out how to get it to you guys, but I'm going to get it to you. That's for sure. I promise you that. I'll probably, because, right, this is not my webinar, stuff like that, so I can't really broach on, this is Tim's, Mr. Sykes, you guys are his group and stuff like that. He's just doing us the favor, letting me finish. So I'll make sure to check with him and make sure you guys get emailed it out and stuff like that. Yes, so I do have a hedge fund where our students can trade in that finish our boot camp, where you can day trade with as little as $2,500 and have access to 15, 20,000 in buying power, and there's no PDT. I have my own internal software and all that fun stuff, and so my students do get access to that also. Dun, 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 dun. Hey, Alex, let me ask some questions. A lot of people ask for programs on the Mac. E-Trade probably works on Mac, like retail brokers, like Ameritrade, Thinkorswim, E-Trade. Those will probably work on Macs. If you're looking for more specialty brokers, like in high-end software, sadly, no trading company makes products specifically for Mac. You got to have a Windows. I use a Mac for my work, but this is my trading. I got these 2 27-inch monitors, and this is my trading setup. I use Windows. Hey, Karina. Yeah, so I do program my charts. I have the daily and intraday side by side. That's just my personal setup I've had for, I don't even know, 10 years maybe. Yeah, I'm 35 years old. Man, since I can remember, I've had my charts like this because I need to be able to see both. Hey, Louis, how you doing? Mr. Perez, do you use a trailing stop on your trades? No. And the reason why is if a day trade is a stock is really volatile, see this stock here, it went from 37 to 33, back to 38 in one day. You can't really use a trailing stop because you'll just get stopped out. Hey, William, how you doing, buddy? So if you're going, William's question is, if you're going long, do you buy once it breaks resistance? Not necessarily. There will be times in certain market structures where you have to anticipate the breakout because most breakouts will fail. And so you're buying before the breakout on support in anticipation of the breakout because there's a good shot it fails. In certain scenarios, like run-up phases of the market, you can buy on breakout because everything breaks out and it works. And so you'll always have to be cognizant of what stage the market is in. The other thing, William, is there are going to be breakout setups, and then there's going to be shorts, there's pullback setups, there's numerous different types of setups. A breakout is one small piece of the world of trading setups, and so yes, there will be certain times, like if you have triangle flag patterns, you're buying it once it breaks, but there's a whole host of breakout patterns that you may be anticipating. What do I think of AVXL? AVXL is a turd with fleas. I mean, it may run for a couple days. It has a history of running, but, in general, it just tends to, it pops and then fades. Hey, Mr. C, how you doing? Can you talk about the Fed's announcement of nothing, why the market went up? I mean, most likely nothing is good, right? Market loves status quo. What the market doesn't like is uncertainty. So, that would be my guess, but I just trade what I see. Hey, Ivan, how you doing? The question box is, for some reason, I'm the only one that can see them. I don't have like a group chat on these things. I can make one for next time. Hey, Nicholas, will you use extended hours for favorable exits? No. You could. It just depends on if you want to sit there. Dude, I got a stand-up desk, man. I can only stand up for so long. Hey, how do you pay yourself, weekly or monthly? I try to do like bi-weekly, but if I had like a really hot week, I may have to pull it out quicker because I just I can't. I've never been good at trading like huge amounts of capital. So once my account gets too big, I tend to take too many risks. So I got to keep taking it out. Hey, Nick Dobie, how you doing? So I got my IRAs at Ameritrade. I got my spare account at Interactive Brokers, and then I use ClickFund for my day trading. That's my hedge fund that me and my students trade at. So I'll use that for my day trading because, we charge like 27 cents for 100 shares. It's just on a per share basis. So it's like, you trade 50 shares or something, it's 13 cents. You trade 200 shares, something is 50 cents, so on and so forth. So it just ends up being a very, very cheap thing. When you say scalp, with $3 a share and a $5 stock be a scalp? I guess, Nick, when I'm saying scalp is just the timing. Like sometimes if you buy a stock at 3 and it goes to 5, but it does it in 15 seconds, I would still consider it a scalp. Hey, Matt, thank you, man. I appreciate you. I did record it, and I will make sure to find a way to get it to you guys. Simon, what's up, baby? How long does it normally take to build your watch list? Hey, Lewis, how you doing? 30 minutes. I do my homework at night, my main watch list, and in the morning I'll spend about 15 minutes looking for gappers. Hey, Omad, what's up, man? Maybe try E-Trade or Thinkorswim. The problem is both E-Trade and Thinkorswim are good for swing trades, but you can't really day trade at them. They're too expensive. Guys, if you are paying more than a few bucks per trade, it's nearly impossible to day trade. You got to get those commissions down. Now, this is the beauty of brokers. Even E-Trade, I've seen them do this. If you call them and you harass them, remember that if they can get a good day trader, that's like the holy grail, right? Because that person can stay there for years and make thousands of trades. They'll do what they can to get your account. Hey, Daniel. So, Daniel, remember that if you have a gap, so Dana's saying if you have a gap on your scanner, what do you do? Well, remember, it can't go red to green, green to red if the gap is there. If I'm getting the gap, I'm looking for ORBs, quick pullback buys, that type of setup. If it's just a really light open on a previous day momentum stock, then I'm looking for the red to green, green to red. So, right, like if a stock is up 15, 20% and it opened down 5, 10 cents just really quickly, that I would be looking for a red to green. Not like, the stock was up 20% and then it gapped up another 20%, because then it's already green. So the thing to remember is just like your checklist of what you do. So you've got a gapper, you've got hot daily charts, get the characteristics you want. Now I have like 10 different setups I can trade. Once I see that, it's got the parameters that I think I can do, so that I know I can get into the stock with low risk. And so I'm either looking for an ORB, a quick pullback buy, a 20 EMA fade, a VWAP trade, a flag, a flat top, a 1, 2, 3 pattern. So I'll have like a whole host of things I can do once I know that this is a stock that I want. And then it's just a matter of putting on the setups that you fit with what you've seen there. Hey, Mr. Burnett, good to hear from you. Man, Pensacola, you gotta come and stop by my house. I'm just sitting around by myself all day anyways. Michael, I made a ton of money but lost on it. Met you in Orlando. $1 sharing. Talked about last week. Would you still try to trade it? Good question. So Michael's asking about CLCD. So if you're making money on it and then losing money on it, maybe leave it alone. So look, it had its big flag. Now it's had its run. So now you got to let it set up, right? You've got to let it come in and do its pattern or whatever it's got to do. It's come down a little bit, but now it's got to do what it's got to reset, right? It's got to set into a new pattern. If it doesn't have a pattern, Michael, you can't trade it. Dun, 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 dun. Yeah, Roger, you can trade in the Click Fund if you complete the boot camp class. Hey, Austin, I'm mostly just looking for the gappers in the morning. Trade Ideas has a lot of different scans, but for me, I'm only running Trade Ideas to find out what's moving up or down. And then I'm looking for making my potential list. I'm not running any other scans on this. And I don't keep Trade Ideas open in the middle of the day once the market opens. And the reason why, I'll tell you, is that, at any given moment you turn on your Trade Ideas, it's very powerful software. Maybe the most powerful trading software on the planet. But, dude, it's hard to use. Like, the one good thing, like, with like stocks to trade or like a TC2000, you have your scanners, but then you have your charts, like everything's together. Dude, there's just a lot going on these things. It can be overwhelming. There's just a lot going on. And so I run my scans for the gappers, and then, I usually will leave this alone unless I'm just hunting for some ideas. But now, as I've had more experience, I find that if I need to hunt for ideas, then that means I did not do my homework properly and I shouldn't be trading. Jorge, what's up? I have an issue with executing my play, then I notice that it breaks out and then I don't want to chase. Execute them earlier when they're on, support, or scale in. You have to, look, to make money, you have to be able to pull the trigger. If you've done your homework, you've done everything you can to prepare, then you have to put in your head, like, if I'm going to make money, I have to pull the trigger, right? And you just got to do it at that point. But the thing is, don't chase them. Anticipate them a little bit or get them at the right time, and then go for it. Hey, James, good question. So, guys, James saying that, he saw our boot camp start on Tuesday. So what's this one that's starting on Sunday? So, James, I've only done 2 days worth of classes, Tuesday and Wednesday, and they're pretty beginner short classes. So what I'll do is get you guys all caught up on Sunday. That way on Tuesday, everybody's on the same page. So that boot camp and you guys will come Tuesday be all on the same one, because we've only gone through 2 classes. So I'll be able to, in like an hour and a half, 2 hours, knock those out. What are the actual precursors that you look for prior to the open for a flag to categorize it as red to green? Good question. There you go. Now remember, there's numerous setups you can use for red to green. You could use a rubber band setup on the daily chart. That could also be a trigger for red to green. This is one type of trade where you're looking for a momentum play, but you can use them for double tops, rubber bands. It's a trigger within the context of numerous other setups. Hey, Mark, I don't personally use hotkeys, and the reason is I have my platform just set up to work really fast, even with just doing the mouse. Hey, Joseph, good question. Joseph's saying, with swing trades, do you have bigger risk? Meaning on day trade, your risk might be 15 cents, but a swing trade, you're expecting bigger move. Would you move your risk lower by keeping a similar reward to risk? Well, Joseph, your stop losses will be tighter when you're day trading, but when you're swing trading, they're going to be looser, but you're going to have a lot less shares, right? Like you may trade 1,000 shares of some stock, when you're making a day trade, but when you're swing trading, you might have only 200, 300 shares of it. So your risk ends up being the same. This could be a potential play tomorrow. The stock is never has too much volume, but I would put it on your watch list tomorrow and see if it comes out with one of our setups. Hey, Mona, how you doing? How do you choose the right trade when you're under the PDT? Good question. So, Mona, one of the things that happens when you're under PDT is obviously you have to be a little bit more selective. Honing down which setups you're really good at is the whole ballgame. Like, what are your A-plus setups? What are your high probability setups? I mean, once you're trading live, you should know, like, I trade this pattern 65%, this pattern 72%, this pattern like this. You should have some data behind what you do, and also just an inkling of how good you are at certain things. And then really in the beginning when you're trying to build, it's waiting for those right moments to trade the setups that you're really good at. Oh, thanks, Mr. Pennington. I really appreciate it. Hey, Mr. Butts, what's up, baby? What's going on in Virginia? Hey, tell your wife I said hello. I miss you guys. Jason, we're probably running about a couple hours. Class at night, guys, Tuesdays, Wednesdays, Thursdays, Sundays. I would count on 2 hours, mostly, maybe an hour and a half of class and a half hour of Q&A. Hey, Kantilal, how you doing? My watch list, I'll be I'll be trading in front of everybody in the chat room every day. Um, so that's where I'm usually going over my trades and stuff like that. Usually we have a great blog, by the way. I probably have more educational material than anybody on different setups and stuff like that. So I'll keep my watch list up here too. Hey, Sakina, how you doing? You better get some sleep. It's bedtime. Oh, hey, Kwan. Hey, Ivan. Tonight I'll be making my watch list. It won't take long. I'm going through my scans. I'm looking for stocks that might be ready tomorrow. And then 15 minutes before the market opens, I'm looking for my gappers. Hey, Casey, E-Trade and IB, I think are pretty good brokers. I mean, you're gonna get what you need out of them. How often do you run your scans during the day? Phil, 99.9% time, I'm not running any. My homework's done, pre-market, I'm ready to go. If I need to hunt for something, I may during lunch look for day-long consolidation plays or VWAP trades. But a majority of the time, if I'm hot, my work is done by lunch, so I don't have to run the scans. But at lunchtime, you can start running your top gainer scan to see what's going to break end of day or fade, or what's coming back to the VWAP for your VWAP bounces. Hey, Chris, you can't pay $10 a trade and statistically actually make money. Hey, on the other part, I don't use pre-market data. So yeah, I will watch them pre-market, but then once the market opens, the pre-market data is erased. I mean, not really. I mean, it had a nice move. I'll give it that. And it did have a day-long consolidation play yesterday, so you could have definitely played that. I saw a bunch of guys in the chat room playing this, but I just didn't have the heart to play this thing. I figure as a buck, it's going to run 10, 15 cents. It ran a little bit more than that, but it did do a day-long consolidation play right in the afternoon. Hey, Lewis, Mr. Perez, I don't hold stocks through earnings. I only wait for them post-earnings. Ryan, fast is, it's all relative. What's fast to you might not be fast to me. But they are quick. Sometimes they happen in seconds. Hey, Brian Ortiz, how you doing? Based on what you mentioned, when you quit your job, based on what someone makes in a year, what percentage of that should someone consider be making trading before considering quitting their 90K? Brian, I never really thought about it like that. For me, it was more of, do I have the skills to actually quit my job and make it as a trader, first of all? The second part is, do I have enough money saved up? And if you can't make money while you're working, it's hard to make money when you're not. So, you should be able to replace your income in some manner. I mean, you may not get there all the way, but you should be able to replace your income in some manner while you're working and trading. And that'll help you build up your bankroll. But then it's just a matter of comfort. Like, do I have the skills and everything I need to make a go at this? Oh, it's a miss? That's even better. No wonder you're so nice. Hey Sharon, how you doing? Yeah, I do boot camps every handful of months. So like probably the next one will be Thanksgiving-ish. Austin, no hotkeys for me. What is the range and price you trade? I don't have one. I'll trade anything. I prefer not to trade dollar stocks. They just don't give me that much range. But you know, if it's really moving, I'll do it. Oh, Austin, come on. No, it's not a big deal. Hey, is my settings for VWAP? There are no settings in VWAP. I don't believe. Mine just says VWAP. So I guess zero. Alex from Chile. What's up, baby? Hey, Alex. I personally don't trade pre-market. I know a lot of traders that do. Once again, it's just not my cup of tea to be in front of the computer trying to make trades. There is the human body, human brain. You have 4 or 5 good moves in a day that you can make. I don't want to waste them that too early. I don't want to be winded for when the market opens. I got to get my mind right. Yeah, this MIFI, I would watch it tomorrow and see how it opens, and if it ORBs, if there's volume, all that fun stuff. Hey, Quan, the next boot camp starts now. The next boot camp starts now. Sunday, baby. Hey, Daciel, Mr. Gonzalez, how you doing? Good to hear from you. I finally figured out how to stay consistent with my trades and not lose money. That's awesome. Hey, man, that's a huge thing. Hey, Colin, how you doing? A rubber band setup is just like it's an overextended setup, like a stock goes from 2 to 10, so it's just a parabolic setup essentially. I'm sorry, everybody uses different names for some reason for some setups. Jorge, do you have a long-term newsletter? No, I don't. Probably something I should do at some point. I'm gonna put that on my to-do list. I'm actually pretty good at those type of trades. Hey, Tanja, how you doing, hon? Hey, Jorge. Overnights is strictly based on patterns on the daily chart. You may be playing bounces, flags, but you are primarily using strict daily charts. So you might be buying at the end of the day and then holding for 3, 4, 5 days. Hey, Casey, these classes, 2 months, my students have lifetime access to a boot camp class. You can come in boot camp class as many times as you want, live class. I'll have people that took class 3, 4 years ago pop by and say hello. Every class is recorded and archived so that you can come back in and rewatch class, all that awesomeness. So like I have a module page too where all the classes will be archived so people can rewatch them. And I even have all the old boot camps in here. And you can come in and take them in as many times as you want. Hey, Mark, how you doing? Yeah, so it's not a it's not a short answer on how to track it all and journal it all. Frankly, I need an hour, an hour or two. But you can start with Excel. That could be an easy way to do it. Or use like a software. Who has a good trade journal? Somebody just sent me. Think of its name. One of my students just sent me this awesome trade journal. Let's see. Can't think of my name. You're gonna have to remind me. I'm almost brain dead. I've been up since like 5 a.m. Main things you want to be tagging is your patterns, your reward to risk, success ratios, your average gain versus your average loss, how you trade during certain times of day. Those are the kind of the things, and then you want to build kind of an apparatus on how to enter everything quickly. Hey, Jorge, next course will probably be after, November sometime. Hey, Sean, I will probably be in Miami, Fort Lauderdale at some point. I try not to go to South Florida too much. There's so much traffic, but they got the best weather, in December. Hey, T. Michael, what's up, baby? Hey, Victor, what's the alternative to $10 trades for small accounts? Go interactive brokers, negotiate down to $5. Even Ameritrade will go down to $5. You go to Trade King, Options House. I'd shop these things around and really get it as less as you can go. Because this shit's going to add up. You make 50 trades, the difference between $5 and $10 is immense. Hey, Mr. Martinez, how you doing, Sir Miguel? I usually be watching just a couple stocks. I mean, I will rank my stocks so that I've got like, I'm making sure that I have a focus list. I may have like overall a longer watch list because these are stocks that I maybe have been trading the last few days, but I'll have it narrowed down pretty well. I focus on both. I mean, we give equal times to day trading and swing trading in the boot camp. And the reason is, guys, remember what I keep telling you, that the bigger picture exerts the most influence on a stock. And so unless you know the swing part, you will never understand the day trade part. You must know how to swing trade to be able to day trade. Hey, Drew, IB broker should be on a per share basis, per share. So you want to be trading, you want to be paying like 30, 40 cents for 100 shares. Interactive brokers will have a per share. Per share is the way to go when you have a small account. All my accounts are per share. I don't have a single one that's a per trade. Per share, baby. That way, guess what? If I have 1,000 shares and I feel like selling it 100 times at 10 shares at a time, I can do that. I won't get charged. Hey, Raul, what are your thoughts on paid subscriptions like scanners, like Equity Feed? Equity Feed? I think when you're new, you need a good charting program, but your broker may give you one. And you may want to see if your broker, you can duplicate all the scans you would need on your more in-depth scanner at your broker. If you can duplicate it, then you're great. But you need to pay for one tool, whether it's a charting, scanning combo or something like that. One tool. You don't need too many. You got to keep your costs low, especially if you have a really small account. Think about this. I don't run really any scans once the market starts. I already got my game plan. What do you really need to do, right? The problem is, a lot of times if you have to run a lot of scans during the middle of the day, it's because you didn't do your homework. You didn't have a plan. So now you are searching for shit to do. Keep your costs low. Simon, my man, good to see you. Where would you draw the line between low float and e-liquid? Hey, Colin, What's up, baby? So, Colin, that's first of all, a good question, a great question. The liquidity comes in from the volume, how easy it's to get in and out. You may see stocks sometimes with like a million share float, but that day it might have 6, 7, 8, 10 million in volume. So, like, you still will be able to get in and out of it easily. Where you get in trouble is if it's low float and then low volume. Hey Quan, how you doing? Yeah, I mean my techniques are doable for anybody. This is just a long road. Like it's not, hey, I'm gonna study for a couple months, I'm gonna be a trader. This is a long road because this is a job, right? This is a profession. You gotta take this thing seriously. And so there's always a learning curve in it. And so, if your time is tight or your money's tight, doesn't mean you can't keep practicing, going on the simulator and learning and building up your skill level so that one day when you're ready or you have the moment, you've got your skill set. Hey, Daniel, how you doing? This software here is called TC2000. It's by Warden. But yeah, it's called TC2000. I've used this thing for almost 10 years. It's pretty cool. Hey, Sean. I mean, I've got trade journals from like literally hundreds of these guys. I'd have to obviously ask somebody their permission before I fart out their own personal data. Most people don't care, but I mean, they all share it with each other, so I don't think they'd care. But that's part of class that they have to share their trades. But I'll ask. That's for sure. Dun, 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 dun. Dun, 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 dun. You'll have to send me a reminder too, Sean. I will remember. Well, I won't remember. I will remember, but reminder is always easier. Best pattern to begin with small account to maximize chances of success with least risk. Your best pattern is going to be the one you personally trade the best. So you can take the most complicated pattern, but certain people that just gravitate towards it. You ever see a guy like you got a buddy and he's like a chubby chaser, right? You just don't understand why he's all up in that, but he loves it. That's what speaks to him, right? And then you got your other buddy and he's only into this or that, and everybody's always a little bit different. Everybody's got a little different flavor to what they identify with. I could give you the most perfect pattern in the history of the world, and you may fuck it up. You're stressed out, you get a little freaky deaky in terms of the trade, you freak yourself out and you screw it up. And all of a sudden, you trade that pattern like crap, but the rest of the world trades it well. And so one of the things to do is, when you're starting, is to really start gathering data, go in the simulator, figure out what you trade well, and that's where your focus is going to be on those small accounts. Hey, James, how you doing? How do you manage your emotion when you see the stock starts to pull back and you're scared of a free fall? Well, first of all, pullbacks are buying opportunities. Pullbacks are healthy. The stock needs to pull back to actually go higher. So pullbacks are actually amazing. I love pullbacks. I rub them all over myself. Pullbacks are my buddies. So I embrace the pullback. Now, the difference between a pullback and a trend reversal, those are two different things. A pullback will be orderly, it'll be low volume, it'll be smooth, and a trend reversal will be high volume, big candles, volatility, and then so you got to think, like, is this trend reversal or a pullback within the context of a trend? Good question, Mr. Wang. What do you look for and how do you enter a swing trade? Until it depends on the pattern. right? What I'm looking for is patterns on the daily charts. Patterns. Swing trade patterns. There's different patterns, right? So like you have patterns like, you know, this is a flat top breakout. This stock that pulls back, this is a, you know, pullback pattern. Right now, this thing's building like a giant flag. You know, so these are different patterns. This is called a flag pattern. So when the range coils up and you're basically buying it near support, stop under. These are different patterns that you have to learn. This pattern is called a base breakout. When a stock is up a lot and it falls all the way down 80, 90% and it bases out for a period of time, it's called a base breakout. It's a very powerful pattern. So that's what you're learning, you know, when you're looking for swing trades is you're focusing not on ORBs and stuff like that, but your daily chart patterns. Hey, Jorge, TC2000 does not come with Bootcamp. Remember, for Bootcamp purposes, you will be able to use free stock charts. And even free stock charts, you can add a la carte some features and make it look kind of like TC2. You know, it'll look exactly the same. But yeah, you won't really need TC2000 just yet because you're going to be able to make this stuff look exactly the same. Hey, Philip, if I'm doing extremely well with paper trading, will I be successful with real trades, or is there a huge difference? There's a difference if you make it a difference. Does that make sense? Some people are really emotional. Some people are insecure about money. Some people trade their hopes and dreams versus stocks. For that, it becomes something very different. Some people are just more mechanical. They look at it and say, you know what? I'm just hitting buttons on a software. Who cares if the number in the corner is a virtual dollar or a real dollar? I treat it the same. And so for those people, you won't see a huge difference at all. You know, but everybody's a little bit different. But a majority of the people, when money's on the line, they get a little nervous. Hey Nick, how you doing? I tried to self-taught myself for years and years and years, till I didn't really work that well. And I met a gentleman who taught me how to trade. He taught me how to swing trade. That's why I'm such a good swing trader. The guy that does our swing trade alerts, he was actually he taught me first, and then I reached out to him a couple years ago, and I'm like, hey, dude, you're not gonna believe this, but I'm really good. And he's like, can I help? I'm like, yeah, dude, I got this website, man, dude, we're killing it. I need somebody to do the swing trade alerts because it's taking up too much of my time. And he's like, really? And so now he teaches boot camp class too. He teaches us 3 courses in our boot camp. He was my mentor. How cool is that? So it took me a few years, but it only took me a few months after I met Paul. You know, once you have somebody in your corner that's kind of teaching you stuff, because I already had a lot of knowledge. It wasn't like I was starting out fresh. I just needed somebody to focus my knowledge a little bit and teach me the ins and outs. You know, the tricks to the trade. We got a lot of Indians at our website. It's crazy. It's like Club India. Hey, Drew, I would say that the swing trade patterns can set up intraday patterns for sure. Mr. Blackburn, you've got to take down my number. Hit me up on my website when you come here. I'm here basically half the year too. When do you get here? Dude, I got tons of room over here. You can come over here anytime you want. You can stay here if you want. Shit. I'm very lonely right now. I got nobody at the house. I've had like 100 students over this year, so I'm always... Dun, 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 dun. Delton Palmer, the name you know. Anybody else? Speak now or forever hold your peace, Mr. Blackbird, 517-974-1480, or email me. When you come into town, I'm going to take you out. We shall eat at Camille's, a magical restaurant. Hey, Mona, what's up? Where in Michigan are you? Yeah, I mean, I'm gonna try to come back to Michigan. I just don't know when. You'd have to keep up with me. Oh, you know what? I know some people in Midland. Good folks over there. I'm gonna try to come back. My schedule is like I hate committing to things because I never know where I'm gonna be. But I will come back from November to December, I think. Um, but I said that last year, and I had a bunch of people in Michigan that were gonna, my friends and stuff that want to meet up with me in Michigan. I came home for I was supposed to be home from November 10th till New Year's, and I got there for like 3 days, and it was so damn cold. I took off to Hawaii, and I spent Christmas by myself in Hawaii like a loser, while my family was in Michigan. Like I ditched everybody. Boca Bash! I don't even know what that is, but this, I don't know if I can keep up with that. Hey, Carlos, I'm not sure when I'll be back to Orlando. Hey, Joseph, are there technical analysis books you recommend, Joseph? Let me see. You could use like a William O'Neill's How to Make Money in Stocks. That seems like a good book. Thomas Bukowski. He's got like the Encyclopedia of Chart Patterns. That's pretty good. I mean, it's 1,000 pages though, and it's the problem is those type of things. They're so dense. Like, how could there be 1,000 chart patterns? There's like 10. How low is too low to trade for low float stocks? There's no such thing. It really depends on how much volume is coming in. And also the price, so it'll be a little bit different. Like, for example, Colin, stock has like 3-4 million share float, but it's doing 20 million shares in volume that day. I mean, you're going to be able to get in and out of that thing fairly easily. How many green candles do you look for before you buy when going red to green? None. Has nothing to do with candles. Yeah, Raul, what are your filters for scanning? I run different ones, 4% breakouts, rubber band long shorts. I have a go-to list of like 250 stocks that I've traded this year that I flip through that are trending. So I keep lists of a lot of stuff, like stocks that are trending, stocks that are consolidating, lists of gold stocks, biotech stocks. So I tend to flip through those a lot too, just to run the ringer. And then beyond that, I'm really just searching for trends, breakouts, just simple stuff, pullbacks to support. I love pullback plays. Hey, Joseph, there's no such thing as the most reliable chart setup. I could give you the best one in the history of the world, and you'll still screw it up if you don't identify with it. You could give me the best one, I might screw it up. I've got a couple patterns here, like this 1, 2, 3 pattern we teach in class. For 2 years, I could not trade the shit out of this pattern. Like, it's just like I couldn't figure it out. It's like the most powerful pattern I trade. Most powerful pattern I could think of is a 1, 2, 3 pattern. I could not figure it out though, but I knew it. I could get it once in a while. Sucked at it. 25%, 30% win ratio. Then, one day I just started tilting my head. I started seeing a different angle on it. I boosted my win rate to like 70% on it. I just started seeing it better. Go figure, right? One day you can't hit them, and the next day you see them a lot. So it all depends on how you trade them. Same thing, Mary Beth, she trades flags really well. Mary Beth's my business partner. She was my first student I've ever had, and she's my business partner now. She's like the same way. She trades just mostly flags and earning. She'll trade. I have her do a couple classes too, boot camp. She trades PR earnings breakout flags, which is a very, very powerful setup. PR earnings breakout flags is like kind of her go-to. I'm not that good at that setup. She trades it a lot better than I do. So that's where, you've got to really kind of think about, like, what are you good at trading? Are you noticing any new overall trends in the market? Like, what types of plays seem to be working? Biotechs are hot right now. I mean, everything has been working. I mean, to be honest, it seems like, the market's been red hot the last few months. Low float stocks are working. Everything's pretty much working. I've not noticed that as many failed breakouts of recent. That's not something I've noticed. But also, I never buy anything at highs. Do you think this hot market will end soon? Probably not. Markets tend to go for long periods of time. It's hard to predict when they stop. When I did boot camp, we're on boot camp 28. I'm on boot camp 28. This is the 28th one that we're on. Boot camp 1, I was telling everybody the market's long in the tooth. It's been a bull market for years. It's time for a bear market. Everything's going to come crashing down. It's 28 boot camps ago. What the fuck do I know sometimes, right? These things just go longer than you expect. Trends can go and be very powerful. Even when they give you every sign that they should be done, they still go. So Nick, remember too, like what I would do is go through the top gainers, top loser of the day and start seeing like what kind of patterns are working, and then you'll be good to go. I've been narrowing my focus to stocks between 1 penny and $5. If you find stocks that are, I haven't even heard of any stocks that are 1 penny. Where do you find these things? I think if you're good at them, then that's all that matters. You just got to find out what you're good at. I think people just want to trade things because they're cheap, because they think that's what makes money. But that's not actually the case. Money makes money, not cheap makes money. So it doesn't, the price of your stock has no impact on how much money you make. What matters is, right, the percentage gains and the range that you could get on a stock. So it doesn't really matter. If you had a $200 stock and it went from 400 to 400 and you only had one share, you'd still make $200. So if you enjoy penny stocks, then trade them. If you don't, trade something else. But don't worry about is it what makes the most money or what's best for the smallest account. There's no such thing. It's about what you trade well. And when you have a small account, it just means you have less shares of more expensive stock and more shares of a cheaper stock, but the range is the range. It's all right, Nick. And then, Nick, one of the things to do is just play. Like if you, one day raise it to, you have maybe some better opportunity. And then after a couple weeks, try 10 and see if maybe there's some better charts that pop up. And start changing it around to find your sweet spot. Trial and error. Don't be afraid of the trial and error. All right. Anybody else? Speak now or forever hold your peace. All right, my friends. Well, going once. Going twice. So, adios, muchachos. Peace. Oh, guys, don't forget, you can just hit me up anytime. I'm always running around. Clown Town, baby. Peace.